What is up? What is up? What is going on, everybody? I hope everybody's doing great. I wanted to talk to you guys today about how to dollar cost average into two types of crypto projects. One that has been around for a little while that you just may have made a bad entry point on or entry point, and then the cryptocurrency decided to take a dive on you, or the market decided to take a dive on you, and you had to dollar cost average in order to get the best return on your investment. And then one that's new, and how to look at the two very differently, and how to dollar cost average into both of them. Why is dollar cost averaging into any cryptocurrency or even any stock for that matter so important? Well, it's important because you can't time the top of the market and you can't time the bottom of the market. And if you try to do that, you will fail. You will fail every single time. There is only one person that's actually going to time the bottom of the market right, and there's only one person that's going to time the top of the market right. And everybody after that is either early or late. So the best way to get the best bang for your buck and the best return on investment is the dollar cost average into projects. And this is a tried and true method. It works in stocks, it works in crypto, it works in anything that you're going to invest in. So I just picked two projects. Well, I shouldn't say I just picked two projects. I picked two projects that I'm actually familiar with, and by no means is this my money that we're talking about. I picked two projects that I'm familiar with, that I believe in, and that I'm invested in. But I didn't invest in at the top. But we took the money. We took the prices. I took some prices off of their chart and threw them on these spreadsheets, and wanted to just talk to you guys a little bit about if I did this, this is how I would have invested in them. So the first one would have been Gala, and I took the price of Gala, and let's say you were you like the project, you invested in it, and you put $1,000 into Gala, and you put $1,000 into Gala when it was around 71 cents. You would have received about 1,404.29, say 0.3, just round it up to 0.3 Gala tokens, right? And they would have been valued at $1,000. So you woke up the next morning and Gala was at 0.661 cents. It was at 61 cents, which means you lost some money over that night, but you had an extra $100, so you put it in, right? So for that $100, you would have received, 163 tokens, right? And then it continued to go down. You were at 51 cents. You did the same thing. You received 196 tokens. You see how this goes, the value, the tokens that you get go up as we go along, right? So you throw another 100, another 100, another 100. And understand, I just threw some numbers in here, and you can come in here and you can play with these numbers, and I'll show you how that works in a minute. And you get all the way down to it being at 5 cents. Gala's at 5 cents. You throw $100 in, and that's it, right? So you notice I have these red, yellow, green on here. We'll get to them in a minute. So at the end of it, at the end of this dollar cost average, you've invested $2,100. Your average cost is per token is right around 2 cents, and the total tokens you have now are like 9,928, and obviously the total investment is $21, right? I mean, $2,100. I'm sorry. So that's all right across the board. You've invested 21. You invested 2,100. Your average cost is at 2 cents, and If you sold at 2 cents, you would have, if you sold $9,928 tokens at 2 cents, you would have $2,100, right? So what do these colors mean? They're pretty self-explanatory. If you look at the price here at 21 cents where you invested, um, if Gala came back up to this price, you would be at about a break even. Anything below that, you would be in the red, and anything above that, you would be making money. So these charts are helpful because you can set up a strategy. You can come in here and say, I put $1,000 in, but instead of only putting $100 in, I put $500 in here. And let's say I put 500 in here at this point because, we got some stimulus checks or we got, some extra money somewhere or something. Say you put 500 in here, you're going to see the total amount that you now have in is 3,300, but your average cost per token is at now not at 2 cents, but it's at 17 cents, right? So your break even point has just dropped from 21, probably more in between this 11 cents and 21 cents. So your break even points come down. So you see how that can change, how much you have and how you can drive your price down. So you throw another 500 in there, right? See if we can't drop this another level. So that's 15 cents. So you start making money, right? Let's just say right about in here somewhere, you start making money. So you drop yourself a level and you come down. So why is that important? That's important because when you're dollar cost averaging into a project and a project that you believe in and a project that you think is going to be around for a while, and the charts start to go down on you a little bit, like a lot of the cryptocurrencies are now, you have the ability and the chance to drive your price down that you own per token. And this is important because let's say your plan for Gala was that you wanted to 10x it. It's a blue chip. You just wanted to 10x it. I don't know, throw a number out there, 10x it. Well, instead of you waiting until it was, where you bought up at 71 cents and you just sitting on it and doing nothing with it and waiting for it to 10x from 70 cents or 5x or 2x. Let's say you guys wanted a 2x, it's a blue chip. So you just wanted to 2x that at 71 cents. Well, instead of just sitting there waiting for that to happen, you can take some proactive steps. And now you're looking at a 2x at 15 cents instead of 71 cents. So a 2x at 15 cents is going to give you, let's see, 37 and 3,700 and 3,700, 70, about $7,400, right? So you look at that and you say, okay, you still 2x your money. You just did it a lot earlier. Yeah, you had to invest a little bit on the way down, but it gives you a better opportunity to make money sooner. So everybody else that's waiting for that 2x up at 71 cents, you're celebrating a 2x a whole hell of a lot earlier than they are. So this is the advantage of dollar cost averaging into any type of stock or any type of cryptocurrency project. And this is how you do it. You got to set yourself up a spreadsheet like this. You got to know when you enter any project, where that price was, how many tokens you had, and then you kind of just work your way down. And you always have to know, where is my break even point? And at some point, you have to ask yourself, am I comfortable with that break even point? Or do I want to continue to drive that break even point down? I'm a more aggressive type of investor. So I am always going to dollar cost average my way down. Some people are more passive investors. They will get to a point where they just sit and wait. Well, that's not in my personality. It may be in your personality, but it's not in mine. I would rather just dollar cost average my way down and get my money out early and earlier, and get to my goals a little bit earlier than just sitting and waiting for everything to come to me. I would rather go get it, and that ensures that I'm getting the best bang for my buck at the right time, right? And that's not to say that I dollar cost into every project that I'm in, because I don't. But the ones that I think that are going to be around for a long time, and the ones that I think that are going to do well, I dollar cost average into them, because I want to be even with them as quickly as them projects as quickly as I can. So you can do this. This is a blue chip. Segal is, I call it a blue chip. It's been around for a long time. You know it's not going anywhere. So you can kind of slow play this a little bit, and you can slow play it all the way down, putting more money in when you have it and less money in when you don't. But set your levels of when you're going to dollar cost average at what price, and then figure out how much you're going to do, all the way down. And I just showed you can play with these numbers. And if the math's right on your spreadsheet, then you'll know where you stand on every project that you have, and you'll know where you stand on that particular project and where you feel comfortable. But you have to know where you stand, and what you want to do with with every project that you're in order to feel comfortable with where you're at with your investments. And so, that's a quick overview of like uh, a project that's been around, like Gala, right? It's been around for a while. It's not going anywhere. But let's talk about a new launch, MetaMonkey AI, right? So let's talk. It's only been out for 5 weeks. So how would you handle a situation like this? The chart's going down, but you still believe in the project. You still believe it's going to be around for a long time. You still believe that you are going to be in the project for a while, and you believe that the price is going to go up at some point. But it's down right now, right? And you were in on a pre-sale, right? That's the key here. You were in on a pre-sale. So the pre-sale for MetaMonkey AI was, um, the minimum was zero point 0.2 ETH, which was roughly at that time, I don't know, I estimated this to be around $300. The price was 3031, right? Which would have gave you roughly, right, 967,000 tokens, somewhere in there. That number is really not accurate because I don't really know what 0.2 ETH was at the time, but the minimum buy-in was 0.2 ETH. So I tried to do some rough math there, right? I think it's close to where ETH was at the time. But it launched, it went up, and it came back down. So let's say came down to a 0.028, right? And you said, you know what? Throw $100 at that, right? You would have received, X amount of tokens here. About what's that? About 357,000, somewhere in there. You threw another 100 at it here, and you received, another, same, did it at 26, 3026, right? And he threw another 100 at it at 23025, right? So your total investment into MetaMonkey AI is $600, right? And the total tokens you received were about 2,117,000, somewhere in there. And the average cost that you would have would be 3028. You see how you took that down from 3.1 to 2.8? right? So I want to show you something that's really interesting here. So when MetaMonkey AI would get to 3028, you would actually make your $600 back, right? So if it actually came up to back up to 3031, right? You would be sitting on $656. So you would be ahead about $56 at that point, right? Just by doing nothing but dollar cost averaging your way in, you would have one lowered your entrance fee, your entrance price to 3028. And obviously you could play with these numbers, right? So let's say, you decided that you were going to go here and you were really bullish on this. And, me being an aggressive person, this is what I would probably do because I'm an aggressive investor and I just gave it to you in a very passive way. Let's say you threw 300 at it here. You decided to throw 100 at it there. You said, you know what? I'm going to go with another 250 here, right? And we're going to see where that gets us, right? It's going to tell me that I'm $950 into MetaMonkey AI, right? And oh yeah, there's another 300 here. Yeah, that's right. So now my price is 27, right? Instead of 28, it's 27. Now I'm 1,150 in, and if it gets back up to where I originally bought into it, I'll be at 1,300, right? So the only thing I needed to do for me to really see any type of, okay, I feel really good about it is, you know, for it to get back up to 3031. That's it. I dollar cost averaged my way in. My entry point was lower, so I don't even have to wait for it to get the launch price for me to be okay. I'm okay right about right here, these 3026, two about two levels before, after I dollar cost averaged in. I'm okay. I'm actually making money at this point right here. Right around that, you know, not exactly making money at the 3026, but between the two zeros, 26 and 3028, you're fine. You're fine right in this area right here. But if because it's such of a new project, right? It's it's gonna come back up as utilities go in, and that if you believe that, right? If you believe in any new launch and you believe in any new new project, the chart's going to come down. It's common crypto trading practices. So the only thing that you're doing is once it gets to launch price, I mean, you're winning at that point. So your 10x, 100x, or 1000x is no longer where everybody else's is that just sat and waited at 3-1. When this gets to two, let's say this got to 2 zeros, 3-1, and everybody's celebrating 100x, you've already celebrated that 100x further down the line. So yeah, you can celebrate with them in any project when they get to 100x, but you've already did your celebration down here, and it's the same with 1000x or anything like that. So that's the benefit of dollar cost averaging into another low cap token that you believe in, especially on a launch. If you really truly believe in it, that gives you great opportunity to really, really go in and really, really lower your cost on a low cap coin. And if you notice when we were talking about Gala, we were talking about maybe a 2x, right? Because it's a blue chip. So you're not going to see that big, huge 10x or 100x. So you're just not going to see that in them blue chips right off, at any time soon. But you can in these smaller caps. So the lower you can get to your average cost per token in these lower caps, the more success you're going to see, because everybody that's in pre-sale, they're all eating at the same time. Everybody wants to eat at the same time, right? So if you got, 3031 and everybody's eating at 3031, you get a whole hell of a lot better meal down here at, 3026, 3025. Where if that flips to zero and goes to 2025, and these guys all up here are waiting for, 2031, you're eating better down here, because everybody's looking to take profits at 10x up here. So you're just eating better. You're in a better trading situation. So, and it limits the volatility that you have in these lower cap coins, because you got to predict where the volatility is going to be at. And, once you get to a 10x, you got to anticipate there's going to be some more volatility there. So if you can get to that 10x before they get to that 10x, you don't got to worry about the volatility right there. So that's the other advantage of dollar cost averaging into these smaller cap tokens, because everybody, they all want to eat at the same time. So if you just eat earlier, you get a better meal. So that's just, the name of the game. So you got to know how to play the game. So, dollar cost average into these things. Don't just sit up here and wait and go. My trading philosophy, and yours may be different, is I'm not going to sit up here and just wait for the price to come to me. If I believe in the project, any project, I'm going to go chase mine down and make sure, as I'm chasing it down, I have a plan on how I'm going to get my money back too. So, I may not wait if this gets up here to launch price, right, at 1306, and I'm sitting down here with 1500 invested, right? I'm going to eat a little bit at launch, not all that I'm invested, but I'm going to take some there, right? Just a little, but I'm going to take some. And then as this thing goes up, I'm going to make sure I take a little bit more, a little bit here more, but I'm going to make sure that I don't mess too much with this, my average cost. I'm not going to mess around with that too much, because like I said, you want to, at a 10x, you want to eat a little bit early than everybody else. At 100x, you want to eat a little bit earlier than everybody else. So, you don't want to mess around with that too much. If anything, you want to drive it further down. And, and that's why you hear some people say to you, we're so early on in any project that it doesn't bother me if the charts fall. Because when people say that to you, this is what they're doing. They're lowering their average cost because they're smart investors. So they plan on getting to the head of the table before you do. So you got, understand that. So, like when people say, I want the charts to go down, I want the charts to go down, I want the charts to go down, because they don't want to be stuck up here at this 3031 level. They want to be way down here. So, dollar cost average in, and that's how you do it. But make sure you know what you're doing before you do that. Make sure you know, and you have a plan, and you have like a spreadsheet like this, and okay, this is how much I'm going to invest and when I'm going to invest. And don't be scared to go a little bit heavier at some points and a little bit lighter at other points. That's okay too, because you're always working on bringing that average down. So you got to have a good strategy, but you got to have a strategy that works for you. Like I said, I'm an aggressive investor, so I will go after it aggressively. Some people are passive investors. So they will wait. They will go at it in very small chunks. Some people won't go after it at all. They'll just sit at the 3031 and wait for the chart and the price to come to them and come back to them. So just know what type of investor you are, and then go after it and go get it, or don't go after it and go get it. But make sure whatever it is, you have a plan. And your spreadsheet, by the time you're done, should look like that first one that we looked at for Gala as you're building that out. So remember, this is, a spreadsheet might look like this for a brand new project that you're just building out. Well, by the time you end that, it should look like the one that we have with Gala, where you have your red, in my opinion, where you have your red, your yellows, and your greens, so that at a quick glance you can look at the price, go back to your spreadsheet, look at where you're at, and figure out what your next move is. Without too much math or trying to figure it out or anything like that, and know how much you have into a project, know what your next DCA level is, so that you know exactly where you're going, and all that should be laid out for you on that chart. You should have that figured out. So that's my little spiel about how to dollar cost average into a blue chip that's been around for a while versus a new launch that is just launching, and some different strategies that you can use, and why it's so important to dollar cost average in. I'm not sure if this video will help anybody. Maybe it will, maybe it won't. But I just felt the need to make it because we talk about dollar cost averaging so much. And I'm not quite sure that people understand the significance of dollar cost averaging, and also even how to do it. So, I maybe this helped you, maybe it didn't. Leave me a comment below, like the stream, share it, subscribe to the channel. I do my best to try to teach you guys kind of what I do. If you take a little bit from it and use it, appreciate it. If you don't find any value in it, at least amuse me and watch it anyways. But you know, I just want to share with you guys kind of how I look at things and what I do. So with that, guys, like the stream, share the stream, subscribe to the channel. Appreciate your time. Hope this helped. With that, I'm out.